Time to turn up your TVs. Joining us now, the dynamic duo of Alan Nuckman and Andrew Keene. They're on the floor of CME Group and ready to go for Traders Unplugged. Hi, guys.
Hi, Angie.
Topic number one, stock scaredy cats. People are fearing getting into the market. What do you make of this?
I think it's a bit of an irrational fear. You know, this market's all about controlling risk. As a professional trader, you're right, you're wrong, but you need to control your risk on each trade. People don't look at it that way. People kind of look at it as an all-in type thing, which I think is wrong.
I definitely agree with that. You know, if you did a history and a study of this, if you actually invest money in the stock market on the same day of every month, you're going to have better returns over the long run than just going all in. You know, if you have $10,000 to invest, instead of going all in on the market highs, put a little bit every month, you get a better return.
We're not doing surgery here. People aren't dying on the table. It's money. You can always earn more, but control your risk on each investment so you live for another day.
All right, let's move on to topic number two, Pepsi or Oreo. A famous activist investor suggests that perhaps Pepsi should do a spin-off and buy Oreo's maker instead. What do you think about this one?
If you look at it, Nelson Peltz owns about $1.2 billion in Mondelez, MDLZ.
That's a lot of Oreos.
$950 million in Pepsi. So if they came out and Pepsi bought Mondelez for, let's say, $36 to $38, which he's talking about, it's a 20% premium. So what does that mean? That means that stock goes up 20%. Does that mean Pepsi goes down 20%? No. So of course he wants it to be bought. He's going to make money off of it.
I like the idea of selling an out-of-favor stock that's already had a huge move, as we've seen in Pepsi. Pepsi's broken out at its highs. But if you looked at MDLZ, it had a big drop from 40 down to 25 last year. So I think it's undervalued. And if you look at technically, it traded between 28 and 32. That target's 36, which is about 15% higher. So I like buying the cookies and getting rid of the beverages.
Topic number three, mobility to the max. Which company is best positioned for smartphone users?
My play I want to look at is eBay. eBay's got solid support at $50 from a yearly basis, and the PayPal angle, as we get further into mobility, more people are going to be buying things on their phone with PayPal.
If Alan looked at the earnings report, eBay was an awful earnings report, and also they're getting a lot of competition into the PayPal space. I would stay away from that one. The one that I actually like is T-Mobile, TMUS. They spun off from PCS. The stock has been on fire. I think they're going to be acquired by someone. We see a lot of acquisition in the mobile space. We see Leap being bought, Clearwire being bought, Sprint's probably going to get bought. So all these are getting bought. I like
Hey,
TMUS.
I think I just bought something with my PayPal on my phone. That just got bought.
Let's take a look at the bonus round question for this week. Name the famous couple that reportedly is spending $750,000 on gold toilets for their new home.
I know this one. Kim K and
Kanye.
That's it.
Excellent.
I got it this time.
You scored huge. Thanks for being on the show, guys. First Business continues right after this.